3, 2, 1, go. After I say go, just take a 2-second pause, then you can start with your talk, sir. Okay? All right. We are starting in 3, 2, 1, go.
So good afternoon, everyone. Obviously, they're all surreal times, and the panel is kind of very apt. Investors code for startups during crisis, and we also have a very good set of panelists, who've been investing for a while now. In India, businesses focused on India as well as some of them focused on regional and global markets. So with me, my name is Sateesh. I'm going to be the moderator for this session. I manage India Partners, an early stage venture capital fund that focuses on digital transformation and healthcare. With me, I have Pankaj Makkar from Bertelsmann. They focus a lot on media, financial services, and consumer businesses. I have Sandeep Murthy from Lightbox. Sandeep, again, is a fairly well-known and prolific tech and consumer investor. And Imran Zafar from Gaza Capital. Gaza focuses a lot on, again, education, consumer, and financial services sectors. All of them manage, fairly, reasonable size funds and have a big portfolio. So welcome to the panel, Sandeep, Pankaj, and Imran. Um, so if you really look at what has happened, last couple of months, there's kind of anxiety, fear, and panic everywhere. Consumers, of course, worried about income and job loss. If you really look at enterprises, I think they're very, very tight cash flows and their revenues have shrunk. And they're working really hard to kind of keep lights on. I mean, even to just focus on their core business, they got to get the supply chain going. And the governments are all busy around the world managing the because, of course, all the citizens now expect food, food, healthcare, and shelter, irrespective of whether they have a job or not. And like I said, the overall environment is filled with fear, anxiety, and panic. So I want to start off this panel discussion asking you to share, your perspectives. You must have seen, at least I've experienced, the dot-com crisis and then, the 9/11, so 2001, 2001, 2000, 2001, and the financial meltdown in 2008, and now this. It'd be great if you can spend some time recapping your experiences and how is this any different, and what should entrepreneurs do? We'll start with Pankaj.
Sure. No, thank you very much, Satish, for kind of laying the background, and it's a pleasure to be on this panel with all of you guys. Really appreciate you guys getting us. From a crisis perspective, this is something that none of us have ever seen in our lives. Bertelsmann is a 185-year-old organization. There are people who are more than almost 55 years of working at Bertelsmann, and they have not. When I was talking to some of these people, they tell me that they have never seen this in their working lives. So this is something which is quite unprecedented. The reason why this is unprecedented is because of two reasons. Number one, as of now, we don't know what is the expiry date of the crisis, and that kind of makes us quite chaotic and uncertain. And number two, there is definitely a health angle, and then there's a financial and economical angle attached to it, and that kind of makes it complex. Now, of course, we have all gone through either a health crisis or a financial crisis in our lifetimes, and we've come out of all of them. I am very confident that we'll come out of this crisis as well. But given that this all has multiple layers to it, it does make it extremely complex and uncertain. And we then have to make sure that we have all tools available to us to solve this crisis at the best of our abilities. At this point, I'll pause and let others also talk about it.
Sure, sure. Thanks, Pankaj. Sandeep.
Yeah, I know. Look, I think you said it. Fear, anxiety, panic, all of these are there. I think ever thought about things that we worry about in general? We worry about how sentiments shift. And I think this, in addition to the clear health and economic things, I mean, the sentiment shift that you outlined with those emotions are just new. And I think that being said, you pointed out the dot-com boom and bust, the 9/11, the global financial crisis. All of these had perhaps sectors or issues that they would kind of be more focused on and limited to some extent.
Correct.
This is so broad-based that I think it's a different scenario altogether. Where when you look back at the tech bust, the dot-com bust, consumer durables and consumer discretionary spending recovered very quickly. It didn't drop that much at all. Tech got hammered, and tech took a while to come back, but that was okay. Again, with the global financial crisis, you didn't actually, even there again, discretionary consumer spending wasn't radically altered. You look at this, it's shifted everything. And that being said, I think that there will be changes that will come about that will allow for the world to continue on. And I think it's incumbent upon us as people who are interested in trying to plan for that and create those future businesses to try to identify what those changes are going to look like and try to figure out how both our portfolio companies as well as other prospective companies can play in that world. So I'm sure we'll talk more about those as well as we go on.
Yeah. Thank you, Sandeep. Imran?
Thanks, Sateesh. No, I agree with Pankaj and Sandeep. I mean, this is unprecedented. I have no memory of zero revenue first quarter in my career. And, you know, I speak to folks that are more experienced. They have no memory of zero revenue businesses. So this is unprecedented just because of that one fact. Secondly, I think, you know, the world is completely moved beyond the health crisis. That doesn't mean the health crisis isn't real and isn't clear and present. It's just that the secondary effects are now beginning to show up. And the tertiary effects are, you know, some time away. For example, you know, the liquidity crisis you're seeing in financial services, or the change in you know, consumer behavior, how much of that could be permanent or not. You know, I always think, you know, I relate to this crisis a bit like what happens in Delhi when it rains. When it rains, there's a traffic jam. You can almost bet on it. And people spend a lot of time about, you know, why did it rain? Did it rain more or less, and so on? The reality is to deal with the traffic jam. So right now, you know, I'm less worried, relatively speaking, about the health crisis, which is the equivalent of rain in Delhi, but on, you know, how long is this traffic jam going to last, and you know, what's the consequence of that, you know, in our portfolio, in our businesses.
No, I think all very, very relevant and insightful perspectives. I think like what Sandeep, you know, they were fairly kind of local. Some of those, you know, past patterns, whether it's .com or 9/11. But today, you know, if you really look at, I think this has affected all sections of the society, from a migrant worker to the prime ministers to, you know, obviously it doesn't matter whether you're a celebrity. And I think there's a social aspect as well. I think outside of the economic and the health, you know, there's the third dimension, which is the social dimension as well. And I think from my perspective, if I really look at the earlier times, I mean, you did quantitative easing and you kind of let people consume more and hopefully, you know, wait for the cycles to kind of turn back. Now, all governments, all nations have to produce while quarantining people, you know, which is very difficult. I mean, you got to keep people inside, but you still need to produce, you know, for everyone else to consume, you know, which is a very, very difficult, you know, kind of a situation to solve. So I want to kind of switch gears and get your perspectives on, you know, this happened, of course, you know, whether it's late December or early January, you know, late December, we started reading, early January, maybe we started following on a regular basis. Feb, you know, really got a bit more serious about this. What's been your guidance to your portfolio, or, you know, in terms of what are some of the things? I know there are a lot of playbooks out there, you know, on the internet, a billion webinars, but it'd be great to just get, you know, your perspectives in terms of what are the 2-3 things that you told your portfolio companies. You know, we start with you, Imran.
Absolutely. So I think in our case, you know, our founder partners elected to transmit pain decisively, you know, and quickly. And then we decided to transmit pain early and provide relief as things become clearer, as opposed to wait for clarity and then transmit pain later. I think that was relatively speaking a good decision. We did that earlier than a lot of companies, and what that does is it frees up bandwidth. It frees up, the boardroom gets cleared out of the COVID crisis, and you're able to focus on the more important things, which is how do you double down on your partnerships, on your customers who are still willing to pay you money. What can you do for them? What innovation can you drive? How can you keep the lights on product development? So that has really, that has worked out well for us. I'd say in the last 6 weeks or so, and we are now focused. We've gotten past the pain. We've, our employees and our partners focusing on preparing for the bounce, and we understand that the bounce might take a while. But in the interim, how can you go after wallets that are paying you? How can you go after customer needs that are here and here to solve, and for which there's willingness to pay? That's what we're focused on.
Yeah, I'll come back to you, Ron, maybe, with some specific questions about future of education. Park that for a little bit later. I know you're very active in the education sector in terms of investments. Pankaj, I mean, you've got portfolio like, Savan and Ligius. Of course, all of us have portfolio companies whether they're neutral or see headwinds or tailwinds. What's been your guidance, to your portfolio companies or to entrepreneurs out there who are listening to all of us?
Sure. No, absolutely. I think when we started this whole discussion in India, which was mostly end Feb, early March, the first thing that we had to do was try to make sense of this chaos. And the way we thought we'll make sense of it is by looking at China, which was probably 3 to 4 months before us. What we quickly realized was that the peak in China, where if you believe all the numbers that kind of came out of there, was fundamentally a 3 to 4 months to reach peak. And hopefully, if that is the same level of decline, then 3 to 4 months of decline, and then you have status quo of some shape or fashion. So what we quickly did was we started saying phase one is when you are climbing, the numbers are climbing of COVID, and we have not reached the peak. Phase two is when the decline is happening, and phase three is life after that decline and stability has come in. And we started kind of talking to most of our founders and founder partners in terms of this time frame, and start putting together strategies of what to do in these three phases. The first phase, of course, being on cost cutting, cost containment, doing all the things that you can do from creating safety of the employees, your customers, society at large. How can you help the government and things like that? And then phase two, start thinking about rebuilding your business. And phase three, then you figure out in life whether you are in the positive, neutral, or negative side of COVID, etc. What we quickly realized was founders as well as management team loved this concept because they started thinking of life in shorter period or intervals of time rather than an uncertain future which can linger for 1 year, 2 years. And that gave them confidence to kind of put together a strategy, and they started kind of working on it. We actually saw very, very good results coming out of such a strategy. And hence, I've been talking to not only our portfolio companies, but other entrepreneurs at large on thinking of kind of breaking the puzzle into multiple bite-sized pieces.
No, that's great. I think that makes a lot of sense. Sandeep, can you chime in terms of, I know many people have gone and modeled all kinds of scenarios, zero revenue for next like 9, 12 months, all kinds of curves, right? We've talked about V, U, L, and I've even recently heard about a W, so in terms of, all kinds of theories floating around. So any thoughts in terms of your guidance to your portfolio?
Yeah, so listen, I'm probably a bit alphabetically challenged, so I won't endeavor to figure out which letter we're going to go into.
Right.
But I think one thing that I'll say is that we try to understand what's happened in the past, and to say that the past is any indication here is wrong. And I think the only thing we can try to look at to some degree is perhaps what happened in the 1900s, in the early 1900s. And even there, if you look at the starting point, before the Spanish flu hit, the markets were not overheated. They were actually undervalued. And I think going into this crisis, we came into a position where all markets everywhere were overheated. We had a lot of conversation about, is this burn model right or wrong? What's going to happen? You saw public markets not necessarily value things the way the private markets had. And so we were entering this in a position, I think, with every company out there wondering, do we need to put some more rationality into our approach to how we're looking at models, which is perhaps a good thing. And so building from there to a world where now suddenly a lot of different scenarios have come about, I think we've talked about the sort of financial adjustments that people have had to make. But I think one point I'd like to talk a little bit about is, I think out of every crisis come new parameters that become relevant to start to worry about and consider as businesses operate. So if you take the dot-com boom and bust, suddenly we realized that eyeballs aren't as valuable. And so you had to go somewhere below the eyeball level on looking at businesses and start to look at, engagement, revenue, oh my gosh, even profits at some point. And so, some shift of mindset came about. You look at any sort of terror-related attacks, and you suddenly appreciate security becomes important. You have what happened here at 2611, and now suddenly we're very comfortable with the fact that we're going to go through severe or intense security, whether it's at hotels or after 9/11 at airports, and so that's a part of life. I think as we look at this crisis, and you kind of say, okay, well, what could come out as important? I think that the idea of hygiene and transparency become extremely relevant as people are looking at products and services that are provided, whether that's ranging from a box that you're going to get delivered by Flinto Box at home, food that you get delivered by Revel, furniture that comes from Furlenco for us. So we talked a lot about how do you play up these aspects and ensure that you're actually delivering on those effectively. I think longer term, beyond that, I would like to believe and hope that things like provenance and sustainability also start to factor in. I would say that those are probably longer term trends. But in the short term, having each of our companies really explore how are you going to engender trust, build your brand with these parameters as more of a forefront has been an important conversation for us to have.
Yeah, no, I think absolutely. I just want to kind of shift gears into and move into, if you really look at last 10, 15 years, right? I think a lot of businesses that have been funded by VCs all over the world that, made life convenient. If you really look at, I think there have been articles from MIT and there have been articles by Mark Andreessen, Let's Build, where you're talking about, hey, we need the PPE, we need the ventilators, we need the repurposed drug or the vaccine, and many of these tech companies who are $1 trillion, aren't doing much. And today, what people are paying for are essential services. So how do you think this particular crisis is going to change, in terms of the patterns? The convenience-based businesses have thrived reasonably well in the last, 7, 8, 9, 10 years. But with the income loss, job loss, and of course, economies slowing down, people are going to tighten their wallets. So what are you going to see, when you really look at, and what's your guidance to these sets of entrepreneurs who may be looking really good, before crisis, but now all of a sudden, you don't look that good for whatever reason, right? So what would be your guidance to such portfolio companies?
Sure. Yeah, sure. So look, I think in general, as a business, you have to be providing something that people want or need. And I think that's the starting point, right? And if you found yourself in a situation suddenly where the let's say convenience aspect was the only thing you were trading on, I think that was probably going to be under strain at some level in any event. And I think you see that as people have questioned the value at let's say in public markets, or people or business models have struggled to actually deliver on growth and earnings. I mean, ultimately, look, we can talk about valuations and getting up rounds and all that kind of stuff, but if your business model is based on just burning continuously, and that's a affirmation that you're adding value to the ecosystem by raising large amounts of capital, I'm not sure that that's the case. I'm hopeful that there are more companies out there that actually have value propositions that are based on actual customer needs. Now, you're absolutely right that income distribution may be forcing some of those customer needs to be less prioritized now than before, and therefore they will have to live with perhaps lower growth. There's a statement that growth for the sake of growth is the ideology of a cancer cell. And I think that perhaps we've subscribed to that ideology a little too long. And I think that now if we reassess our positions in all of these businesses, it's not just essential versus non-essential services. It is, look, are we growing logically? Are we using our capital effectively? And if you're finding that your product is no longer in the essential mix, then perhaps you need to reassess what you can do to make it more essential to the customer in the period of time that exists, because no product will ever be stagnant. It should evolve based on how customers' needs evolve.
Yeah, no, certainly. I think the rationalization and just being very brutal and honest about it is going to help folks. Pankaj, resilience, right? Again, is so important during these times of crisis. And how do you carry your team? And some of these organizations are fairly large, though they are startups. In terms of how are you seeing the portfolio companies, or what is your message managing workforce, through these turbulent times?
Look, again, we are asking or requesting entrepreneurs to think about workforce in, three different brackets. First is, of course, the corporate workforce, bringing them, getting them to work from home. That's probably the easiest part of the puzzle. The second bit of workforce, I would say, would be people who are either involved in the middle layer of most functions, whether it's warehousing, etc. And then third are the delivery boys and the real blue collar workers, etc. So if you were to kind of create that grid on one side, on one axis, and on the other axis, you were to put the different phases that we talked about, phase one, phase two, phase three. I think for all these nine boxes, we need to have a fairly different strategy to make sure that all the boxes are functioning properly in various phases. And then that is how we're kind of requesting our entrepreneurs to think about it. Again, extremely difficult times, honestly, and some lot of very innovative stuff's kind of going on. I'll give you one specific example. In one of our portfolio companies, which actually is part of the essential services, quickly realized that a lot of their workers had left because of this whole migrant worker issue.
Right.
And they actually needed workers. And then on the other side, we had some more portfolio companies which were under lockdown and were, as Imran was saying, zero revenue or almost zero revenue business. And we actually got both of them to start talking to each other to see if they can, company A can kind of work with company B to even use some of that workforce so that they don't kind of, get, I mean, both of them benefit and the workforce actually kind of benefit as well. So, in situations like crisis, in like crisis like this, I do feel that entrepreneurs are not only doing all the amazing stuff that honestly we as investors can't even think about. They're also going beyond that piece to even work on topics which otherwise would become extremely difficult, whether it's for their own company or for the greater good of society, etc. So we have seen some amazing work coming out of most entrepreneurs in the workforce. Honestly, I've been just been humbled.
No, I think that's a great idea. I think that collaboration has to happen within the portfolio, even across the startup ecosystem, even across large corporations within the country, right? While someone needs a lot of people, someone else cannot really employ all of them. So we move to, obviously everybody's talking about future of work, future of education, obviously online entertainment. Imran, any thoughts? You have huge portfolio in education, future of education.
Absolutely. I think for education, this has been a decade or more of change management in the schools are now, have woken up after a very long time that they have to be relevant, where students are in their homes. It's not enough that you have this great campus and you start in the morning and you end in the afternoon and your job's done. You have to find a way to create the pipes into students' homes and stay relevant there. And I think that's going to be very, very interesting. Schools will invest in ways of being relevant for students in their homes. They're going to try and take a piece of the tutoring market, after school tutoring market, which they had completely let go of. Right. And meanwhile, they will increasingly outsource and collaborate with and partner with new age technology companies that can help these schools achieve these goals and objectives. And I think that's very, very interesting. I mean, we have an investment in a company called Educational Initiatives that works with schools in a B2B format. So we work with schools to help improve their learning outcomes. And in the last month, we've seen a significant increase in the number of users online, using our intelligent tutoring system. We have nearly 1 million users, which we cobbled up in 4 weeks. This kind of momentum may not sustain when schools reopen. But what will sustain is that schools will now get used to the fact that this could come and go. This is not the end of the lockdown. A lockdown could happen again. And they will want to create a permanent base in students' lives at home. You're seeing that, in workplaces as well. One of the silver linings of the lockdown has been how, engineering teams, technology engineering teams in our portfolio companies and IT services teams have been productive, in some cases more productive working from home. And so this will give a fillip to, collaborative tools, the way we hire people, the way we train people. A lot of that is going to be in a distributed environment going forward. I've had several conversations with CEOs of companies who are making a permanent shift on contracting the real estate of their offices and almost having a permanent work from home cadence going forward. And all of that bodes very well, both with schools and in the workplaces, trained for new careers. So I think it's a golden age for EdTech.
Sure. So Sandeep, shifting gears, I was joking with someone. I hope COVID happened 10 years from now, or maybe even 5 years from now, you would have had drone deliveries pretty much common, systematized, autonomous vehicles all over. And then you would have, of course, the smart cities and the smart factories. So, you would have to, AI at full scale deployment. So all of the deep tech or frontier tech, we talk about would have been deployed in applications at scale and probably would have achieved, a certain level of automation. How do you see the world? I mean, you've been, a tech investor. You've done, deals like in Mobi, and even earlier you were at IAC. So where do you see? Do you see the adoption cycle and the funding cycles fast tracked? That's a question.
Yeah, look, I think there's this idea that a pandemic accelerates underlying trends. So I think what Ron just mentioned with education shifting, I mean, coming back to your previous question as well, as to those convenience type offerings now having to reinvent themselves. I think equally the essential services having to reassess how they're actually delivered and how they're consumed, and are they in fact offering the best possible product that they used to have, whether that's education or healthcare. And so I do think that now underlying trends towards delivery and ability. I mean, we've seen Shopify's market cap go through the roof as brick and mortar shops now realize that they want to go more and more online to manage it. And I think they added some couple of billion in just the weeks here. So I think that you start to look at those things. Now, all that being said, the counter to all of that, interestingly, is that we're 100 years past the last large one, the Spanish flu. And in actuality, I mean, outside of controlling lockdowns and all this stuff, the tech we have is going to take some more time to actually get to a vaccination, get to be able to handle all this. So I don't know if smart cities or AI would have managed us much better. I think now being very aware and alert to the fact that this is a reality of how life is going to be going forward will probably benefit us. And sure, tech will play its role in ensuring that we manage for that going forward more effectively, whether that's through contact tracing or whether that's through ensuring that the places are maintained at a certain level of hygiene. But I would say that it's not necessarily clear to me that tech did a whole lot to change our course immediately in the short term. Over time, it will right now. I do think that these underlying trends towards distancing in different ways will accelerate. Now, that's going to have massive effects in various ways, which I don't think we can predict or project right now, and including all that's been talked about in various other books and themes about what it does for joblessness, what it does for just usefulness of people in a context of machines doing more. But yeah, it's accelerated, and I think finding business models that fit for that is going to be important, and finding companies that can kind of navigate through that change is what's on us to figure it out.
Sure. No, but if you really look at, I think from SARS to H1N1 to COVID now, even if you not worry about Ebola and Zika, some of these might have been localized. This is kind of the fifth pandemic cycle in the last 20 years, right? So maybe, going forward, along with I know in the last, 10 years ago, the world was not as connected as it is today, but they did have, of course, certain impact. I mean, if you look at SARS impact in Southeast Asia or Ebola, Zika in the African countries, I think it has been pretty bad. Maybe the entire world is not exposed, but along with the economic recession cycles, I think all the entrepreneurs and the VCs have to factor in the pandemic cycles as well, into their kind of investment thesis.
Sateesh, just to add on that, I remember distinctly we made our Series A investment in ClearTrip in 2005, and on our risk factors, I think there were three. I think it was a terrorist attack, a pandemic, because we were coming off of SARS, come off of 9/11 just a couple of years earlier, and I can't remember what the third one. But I mean, the fact that it was listed as a clear risk factor at that time, and yet going forward, it's never been in any other business case that we ever looked at again after that. So.
Right.
Our memories are short, which is the unfortunate part about it. Our memories are short. Customers go back to the world as it is. Investors go back to expecting things to move in a certain direction, and that's the really unfortunate part about it. And maybe there's enough time with living with this crisis that perhaps we could say that behavior might change, but it takes a little bit of greed and a little bit of fear going away to shift that balance all over again.
Right. No, I agree with you. Pankaj, how will the future of investing change, or from a due diligence perspective? I know, we're all in the lockdown. We're probably still looking at few deals, while of course existing portfolio is the highest priority. How do you see that changing in terms of what are those additional metrics or due diligence factors that one would look at so that entrepreneurs are prepared when they come pitching to any one of you or us? Yeah.
Yeah, honestly, I first of all fully agree with Sandeep and Imran on various points that they brought up on this topic. I do agree that, let's say, life can be divided into the next 12 to 18 months while the pandemic is really hot. And after that, people tend to forget some of the pandemic issues and start kind of looking at business in general. If you look at the next 12 to 18 months, our view, at least for the Indian VC market, very similar to what is happening in China, which is apparently at a different level altogether. We've been told that VC markets in China are booming, and they continue to kind of see massive amount of investment still, compared to, of course, looking at what's happening there and so on. We do feel that in India, some amount of activity will start, but there will be flight of capital towards quality of companies which already have a lot more capital, which are dominant, which see a lot more tailwinds, and most importantly, in our minds, unit economics are more or less sorted. As Sandeep was saying, it can't be a business of convenience. It needs to be a real business, and real business with real unit economics. It's at least at a growth stage where we come in, becomes a lot more important. And I think that is where we feel a lot of investments may end up going, large checks, if they come back. Again, in the, let's say, 2 year plus timeline, I do hope and feel that topics of whether it's environment, circular economy, smart cities, these trends will accelerate significantly, and those people who were not thinking about these trends as themes for their investments will add some of those themes, and hopefully entrepreneurs will take advantage to fast track some of these trends, and then we will overall be a more efficient and better society. That's my hope.
I think just a time check. Possibly, we're just a few minutes from closing. So any closing remarks? I know we've discussed all the topics, the other crisis versus COVID, your advice to your portfolio companies, resilience required, to kind of get through this nuclear winter, future of education or future of work, other trends, and then the perspectives on investing, what is it that you look for? Any closing remarks from each one of you? Go ahead, Pankaj.
Yeah, from my side, look, the closing remark always, and I did that in another chat also. is that with every crisis, at some point will end. This one will also end. So we have to kind of think about the light at the end of the tunnel. And while we don't know how long the tunnel is, at some point it'll end. And that to be honest, is how I'm looking at it, and I'm guiding others to look at it as well.
Certainly. Yeah. Imran?
Yeah, I'd say that, I agree with Pankaj, but I'd say that, at a crisis like this, investors tend to gravitate towards, investment opportunities that are relatively easy to model. And that creates a bubble and valuation bubble at that side of the spectrum. And they tend to ignore companies that are facing temporary headwind. We know that this will pass and some companies will come back, but it's interesting. You're going to see in companies that have grown through the crisis, and you will see irrational dumping, if I can use that term, of other businesses. And therefore, there's an opportunity at either end. So there is deep value to be found on contrarian investment opportunities, and investors and entrepreneurs should beware of the irrational exuberance on the other side. Meanwhile, my message to entrepreneurs is fundraising is a huge time sink. So, at times like this, you're far better wallets. That's your cheapest source of capital. Go after that with everything you've got. Use this time to innovate if you can. And when the bounce comes back, that's the time to go and fundraise again.
Sandeep?
Yeah, listen, I think entrepreneurs and investors like us are all intrinsically crazy. We kind of look at the world through a different set of lenses, and we try to figure out what could be and how to shift it. And I think that as long as that continues, as long as we continue to try to take stock of what's happened here around us and continue to have that willingness to push the envelope on what's going to be there, I think we're going to find great innovative new ideas and businesses coming. And I remain foolishly optimistic about how things will play out.
No, I think certainly agree. For all the entrepreneurs out there, I mean, it's very important to do an honest assessment. I mean, are you caught in a cyclical thing or are there structural issues? If you don't have structural issues from your business perspective, I think every business is going to be affected cyclically, in the short term, no doubt about it. And then, it's kind of a sprint and a marathon, and this marathon has gotten extended. So you got to realize that you're in it for long haul. But obviously, the ones that get to the finish line are going to be rewarded. So I think this is the time. I'm not trying to be chauvinistic here. The men get separated from boys. So good luck to everyone. I could continue with this panel for an hour or two more because they have, so much experience and, from their own journeys. But we're limited by time. Thank you all. Appreciate it.
Thank you very much.
Thank you, Sateesh. Sandeep, Pankaj, nice to see you too.
Pleasure, guys. Thank you very much.
Bye-bye.
Bye-bye.